the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements for today. Well, Singapore shares were up as investors continue to mount global developments, including the upcoming Jackson Hole Economic Symposium held in the US. Now, the Straits Times Index was up 0.63% at 4,213 points at about 2 p.m. Singapore time, and that is with a value turnover of some 971 million Sing dollars seen in the broader market. Now, let's take you through the closing numbers. As we shared with you earlier, the STI ended in the green as well, up 0.69% at the end of the trading day. We're looking at 4,216 points. Now, in terms of value turnover, that's 1.66 billion Sing dollars. Gainers outnumbered losers, 269 versus 217. Top advances for today, we've got for you GEMH-USD, Jardine Cycle and Carriage, and DBS. And top decliners, we have here iFast, ST Engineering, and Hong Kong Land USD. Well, in terms of counters to watch, we also have Yangzijiang Financial, and that is because the investment holding company said it'll be the anchor investor in a 100 million Sing dollar fund by ICH Asset Management, held by the firm's former CEO, Vincent Toe. Now, elsewhere, from what promising diplomatic signals towards ending hostilities between Russia and Ukraine could mean for investors, to how SoftBank has agreed to buy $2 billion in Intel stock. We've got more international and corporate headlines in focus. And joining me on the line today is Philan Wickramasinghe, Head of Equity Research at Maybank Securities. Philan, welcome back to the show.
Thanks for having me on.
Great to have you on a rainy Tuesday. And let's start with global news this time around. Philan, two things on the top of investors' minds. They are, one, somewhat positive diplomatic signals towards ending hostilities between Russia and Ukraine. I mean, if we look at Ukrainian President Volodymyr Zelensky, he went to the meeting with Trump with a suit on this time, so that's on investors' mind. The second one is the Jackson Hole Economic Symposium taking place later on in the week. How have the two events influenced global markets thus far?
Sure. I mean, let's take Jackson Hole first. I think many investors will be watching this closely for hints on interest rate direction. In the past, Fed chairs have used Jackson Hole as an opportunity to flag policy shifts. Powell actually used it for that purpose last year and delivered a big rate cut soon after. We all know he's under a lot of pressure from Donald Trump to do that again. The problem is key economic indicators aren't pointing that way. They're not particularly very friendly. Just a couple of weeks ago, we had a jobs report revealing sharp slumps in hiring. Then U.S. wholesale prices saw a sharp spike, which is fueling concerns about tariff-led inflation. So all this means Powell might actually keep his messaging carefully hedged without giving out too many signals in either direction in terms of rate cuts. Mm-hmm. Now, on to Russia, Ukraine, I think it's a very positive development to see the talks between President Zelensky and Trump, and also the show of support from European leaders as well.
Yeah.
If this brings the conflict closer to resolution, it is a significant win from a humanitarian aspect. However, from a real market impact, I think it might be a little bit more muted, as we have seen with quite a few of the other geopolitical conflicts recently.
And if we go back to the Singapore stock market as usual, Philan, how did the STI fare today? And any surprises if we look at the biggest movers? I understand one of them is iFast. How worried about the movements relating to iFast? Because shares plunged after a substantial shareholder reduced its stake in the company.
Yes, I mean, let's start with iFast. Whenever a major shareholder sells down a large block, it does send a negative signal, especially as it raises questions on whether the stock has kind of reached fair value. Also, the discount CP Invest was selling it seems quite wide. Having said that, we have seen them selling down off iFast back in January and February as well. So it could also just be a signal that IFAS has reached the exit levels that was previously set by the investment mandate. Now, from a fundamental standpoint, we think IFAS value proposition has not changed. Earnings are set to accelerate next year as their Hong Kong business really kicks in, and their digital banking business in the UK is actually delivering better than expected. Plus, they have received in principle approval from Malaysia's Bank Negara to operate an electronic money issuer license and a money services license, which will help them diversify some of their revenue. So I think there's quite a few positive levers out there despite how the stock has reacted. Now, apart from IFAS, I think some of the other movers, if you look at it, is Singtel, which went up today. I think likely from some of the momentum from their very strong first quarter FY26 numbers, and also the domestic market consolidation that seems to be ongoing. We also saw the REITs doing pretty well, FCT, Ascendas REIT, MLT, getting some interest again as domestic policy rates continue to weaken and fall. And I think of the losers, ST Engineering is of note. That was down about 2%. I think that's after some analyst downgrades after their results.
And let's zoom in on some of the other companies to watch. Thilan, earlier we talked about Yangzijiang Financial and how Yangzijiang Financial will be the anchor investor of a 100 million Sing dollar fund by ICH Asset Management, which was led by the company's former CEO. How would you read into the move as well as investors' reactions today?
I think the investor reaction was fairly muted today on this announcement. Look, I think it's because we don't have a lot of information in terms of the investment style of this fund and how they plan to deploy. However, I do find it interesting that the mandate for ICH Asset Management is to exclusively participate in Singapore small and mid-cap companies from pre-IPO onwards. As far as we know, ICH is not a recipient of MAS's 5 billion equity market development fund. Mm-hmm. So this is a signal that the investment case and interest in Singapore small and mid-caps is broadening beyond just government incentives and initiatives. We have been very bullish on high quality Singapore small and mid cap stock, particularly the ones with good corporate governance transparency. So this actually adds to that momentum and this adds to that positive view.
And we've got another counter to watch also in the offshore and marine industry. That counter is called Marco Polo Marine. So if we look at Marco Polo Marine, yesterday it posted this 4% decline in gross profit to 14 million Sing dollars for its third quarter ended June. How concerned should we be about this? Because it seems like investors were not too happy about the numbers.
Yeah, so we see the third quarter was mainly impacted by lower utilization rates and a moderation of third-party charters in Taiwan. And we actually think that this weakness is temporary. We expect utilizations to pick up, and it will most likely echo what we experienced back in second quarter, where it kind of reached about 65%. We expect utilization rates to hit about 75% as we go into fourth quarter, which means that overall the final quarter of the year will be relatively quite strong. Plus, a lot of the new vessels, the CSOVs and the CTVs, will start contributing more significantly to earnings by then as well. So all in all, we think third quarter is actually just a bottom, and I think you're going to see much better momentum coming through, especially going into the fourth quarter.
Now, if you're just tuning in, we're now in conversation with Thilan Wickramasinghe, Head of Equity Research at Maybank Securities. Well, across the region, Thilan, we must talk about SoftBank Group and the Nikkei and Japan, because SoftBank Group has agreed to buy $2 billion in Intel stock, which is a move that extends its U.S. investment efforts and offers a vote of confidence for Intel, which is struggling. What does the move mean for both SoftBank and Intel, and how optimistic are investors about Intel if we look at price movements in SoftBank today, because that dragged the price movements in Nikkei as well?
Yeah, so I think you're right. It's a vote of confidence for Intel, which has been struggling for some time. SoftBank will gain about a 2% stake of Intel, especially at a time when the U.S. government is also considering taking their own direct stake in the company. Overall, SoftBank's move dovetails with what they have stated as their commitment to advancing U.S. technology and manufacturing leadership. I mean, we've seen Miyazaki-san saying this, quite often. Now, having said that, the question is whether this is enough to keep Intel going. This is because Intel is in a slump and have to take, pretty drastic strategic moves to survive. Either they've got to invest heavily and catch up with rivals like TSMC, or actually break the company up. To go down the path of, getting more investments, they will need customers to justify the money. And in the past, they have struggled to gain orders from the large chip manufacturers like NVIDIA and Apple. So we think Intel is not out of the woods yet, despite SoftBank's investment. So I think this is something that needs to be closely watched, not just for Intel, but also for SoftBank, going forward.
And further away, Thilan, let's talk about fast fashion retailer Shein Group. It has reportedly considered relocating its HQ back to China in an effort to gain Beijing's authorities' approval for its planned Hong Kong IPO. We know that the firm had been mulling an IPO in the US and also in London, facing some challenges there. So what do you make of the move, and what should investors take note of?
Yeah, so I think back in 2021, Shein was amongst the first wave of Chinese companies to move headquarters here. This was kind of aimed at positioning them as more global companies as opposed to Chinese companies. And having a Singapore corporate identity would have helped in internationalizing the business and also take advantage of Singapore's neutral and clean reputation. It probably also helped them lower taxes as well. However, what it has not done, or what it has not helped, was to convince NYSE or LSE that they are truly global or even Singaporean. I think they continue to see them as a Chinese company. So I think that's what you see with this move back, or at least the conversation around moving back to China. It makes a lot more sense. They probably can convince the CSRC to open the door to list on Hong Kong Exchange. So I think that's probably the sort of direction you'll see them taking going forward.
I see. And finally, Thilan, before we let you go, we do want to talk about this one. ChatGPT maker OpenAI today launched ChatGPT Go, which is a new India-only subscription plan that is priced at 399 rupees or 5 Singapore dollars and 90 cents per month. The most affordable offering yet for OpenAI, really, as it seeks to deepen its presence in India. Any quick thoughts on the move?
I think it's a good move to capture a wider share of this market. The ChatGPT Go subscription comes with better features than the free version, such as GPT-5 messages, multimodal tools like image generation and file uploads, but less features and memory than the full version, which is a lot more expensive. I think it gives a wide and also affordable access to AI in emerging markets, and I think that's essential. This will help these markets accelerate productivity and also democratize innovation because you have these powerful tools available at a much more cheaper price point. So I think it's a very positive news item to come out today.
Thanks so much for the insights today, Thilan. That was Thilan Wickramasinghe, Head of Equity Research at Maybank Securities. Thank you so much for joining us today on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.